Look, we are two of the most pragmatic people you will ever meet. And so a really clickbaity title like "A Financial Winter is Coming" isn't something you would normally get from us.
Right.
But there is so much data right now showing red alarm, triple threat midnight, as Michael Scott would call it, that it's something that we all need to be aware of. Now, what I would say is, while we all agree that something pretty bad is coming, we don't know when it's going to happen.
Nope.
And so are all my investments still in the market? Yes, because we may go up for another 2 years before it crashes. It may be next month. No one knows. But there is some really fascinating data. In fact, we've been talking about this for days when we started looking at these charts, and we want you to see them.
So I sometimes I feel like the what is it, the little red hen, or who is it? No, Chicken Little.
Yeah.
Chicken Little, not the
sky
little red
is
hen.
falling.
Sometimes I feel like the little red hen too, like going around like making the bread and nobody wants to help. But no, the sky is falling, right? And there are people, many people that I respect who kind of, I feel like have their head in the sand, right? They're like, no, the economy's still strong. Companies are still making products and selling them, and everything's going to be just fine. There's nothing fundamentally broken in the economy. But I don't think that the whole thing has to be broken for this financial winter to come. There are so many indicators that I think, even with a functioning economy, we are looking at a potentially extended period of time where things are not going to be very good.
So let's go back to 1950. Let's look at this chart that has been getting us talking. This is the median single-family home price in America from 1953 to 2019. So you see from 1950 all the way up until 1998, there's very little variability in it.
This is adjusted for inflation, right?
Yes.
So if you take inflation out
line
of the equation, right, the orange line, if you take inflation out of the equation, home prices really didn't change.
No,
For
you see the blue line, they've
decades.
changed
Right.
dramatically.
Yeah, substantially.
The actual cost. But and adjusted for inflation, I mean, we had 50 years of very constant numbers of what just a home costs. And then 1998 hits. There were some changes in 1998 to the laws of access to debt, right? And also inflation rates had dropped down after highs of 15% inflation rates, right? And so all of a sudden, the price of a home just explodes. From 1998 all the way to 2007, it is just exploding after 50 years of constancy. And it just explodes. Now, what we know what happens after, when you see what a trend should be for 50 years and all of a sudden it explodes, you know what comes next, right? It goes down, and welcome to 2008. We remember.
Interestingly enough, we look at 2008 and it feels like, man, home prices really tanked. Look at where they are on the chart. They are totally level with where they sat for 50 years.
2008 was
The
actually
bottom.
normal home
It was
prices.
a normal year, exactly. Yeah. And what's happened since then?
Yeah, let's look at the rest of the chart now.
Oh man, if this is not scary, I don't know what is. Home prices are back, again, adjusted for inflation, they're back to where they were right before the crash. And if you take out the inflation equation, they're higher. They are more expensive than they have ever been. I look at houses in my neighborhood that are selling, and I cannot believe what they're selling for. It just is flabbergasting. But yet here we are, right back where we were.
And now, so we know what an American can afford, because now we're going to look at what the average household income is over that time. I mean, it's constant, right?
Yeah.
So that hasn't changed, but now everybody's paying way more for their house, and we know it's happening on way more debt to get there. And so now, we just had a pandemic. 36 million Americans lost their jobs. 36 million.
That filed for unemployment. Yeah.
And they can't pay on those mortgages. Now, the bottom hasn't fallen out now. Why? Because the government enforced protections on foreclosing on homes and things, right? And we remember 2008, and the banks say, oh, we don't want to foreclose. Just, we'll give you a few months of forbearance, just, and we're all hoping, but that doesn't look good. That now everybody's behind.
Exactly. It's a few months of forbearance. the government cannot stop banks from collecting on mortgages indefinitely, right? So what happens 6 months from now when you still haven't landed a job because, okay, things are starting to get back to normal a little bit, but there's still fewer jobs available. There's still a lot of companies that are either not open or they have a smaller staff. They're having to kind of slowly restart. So we still have millions and millions of people out of work, millions and millions of people who can't afford these mortgages, and the banks eventually have to come and collect. And they're behind.
And let's talk about those loans. So this one,
That scares
if
me.
the other one was scary, this one is scarier. So this is the real denial rates of people who apply for a mortgage, the percentage that are going to be denied. So that number was fairly constant for decades at around 27% denial, right? People apply for a mortgage and the bank says, sorry, buddy, you don't got enough money. This isn't a secure loan. And then down to 2004, whoom, it just plummets, right? And that causes home prices to go right, like we saw on the other chart.
And it means
because
people
they're getting more debt.
People are getting mortgages who in the past would not have ever been accepted.
Exactly.
And interest rates are lower than ever. At the time that was the case, and certainly today.
So we saw that what happened in 2004 with the denial rates was a terrible idea. Look where it is today. We're getting pretty dang close to the denial rate from 2004 that caused the problem.
Yeah.
We're right back where we started.
And we've been saying, oh, no, we fixed that, right? We put some regulations in place. The same thing can't happen.
That was
I can't tell you how many times I've heard that. The same thing can't happen again because we fixed the problem. Apparently
the same
not.
thing is happening again. I mean, look at these charts. You see 2004 mistakes that have been made, and now we're right back to the 2007 place where the market has skyrocketed. Yeah. Now we look at the stock market now, and we see, wow, global pandemic, stock market prices just absolutely tanked immediately, right? To be expected, right?
Absolutely.
And now 36 million people have lost their job. For months, large retailers, JCPenney's and all kinds of retailers, Kohl's, whatever, you know, all those stores, they're all closed, right?
Yep.
And yet, where's the stock price now?
Yeah.
We're just about back up.
We've mostly recovered.
We're just about back to where we started in December,
Yeah.
before all of this craziness. Now ask yourself, does that reflect the market? Does the market price actually reflect
What's
reality?
happening? Yeah.
We all know the answer is no. And so we say, well, how is that possible? Is everybody just an idiot? No, it's because the stock market is being manipulated.
Yeah.
We saw an awesome video from Ryan Scribner.
Yeah.
Got to go check it out.
Yeah.
Where he was talking about how, well, the Fed is buying
Corporate
bonds from the private market to prop them up so they don't fail.
This is the first time ever, right? As far as I'm aware, this is the first time ever. The federal government will often go buy municipal bonds, right? Bonds from cities, right? But bonds from publicly traded companies, this is a new one. And basically it's an underhanded, behind the scenes bailout, right?
That's exactly what it
Keeping
is.
companies propped up. Now, it's a little bit different because a bond will be repaid, right? That's the difference here. But really, this is just a way that the federal government is keeping these companies in operation. How long can this be sustained?
Right.
How long can all the stimulus be sustained?
And what happens when you see these crazy ups? You know what's next is the down, right? And so we've seen that. We look at the market, we have gone back up. And when you have a market that is not reflecting the actual what's happening on the street, what happens? We say the stock market is overvalued, and so you look at all these things, and it is impossible to ignore the fact that a financial doomsday is coming, baby.
Yeah. Now, economies are some of the most complex systems that we can imagine, right? And so there are literally millions of moving pieces going on here. And, you know, do I really fault the government for trying their best to keep these companies sustained? No. And if this pandemic turned out to be a short-term blip in the radar, then all of this stimulus and the corporate bonds and all that stuff would help us to just sort of bridge to the other side and we could move on. All indications are that that is not the case, right? And even if you take out all of the pandemic related stuff, it doesn't negate the fact of what home prices are doing and what mortgage denial rates are doing. And those are the things that scare me. We can't time it. We don't know when it will happen. We don't know exactly how bad it will be. But every time that we look at this, we are extremely confident that sometime before too long, there is going to be a financial winter. How bad it will be, again, are we talking Great Depression level? I don't know. It could be. And that's what worries me.
Yeah, and then we also see people in urban centers, San Francisco, New York and stuff, where people are like, wow, I don't know if I want to live by so many people after a pandemic. And they start to leave, right? That's going to cause problems. And then you see, it doesn't take a genius. Go look at commercial real estate in your city. Vacancies everywhere as retail business has just been destroyed. The outlook for commercial real estate is not good right now. Nationwide, just because retailers are getting crushed by the zone, right? Yeah. And so, there are so many red flags, it's crazy. So what do we do about it? Honestly, for me, I'm just making really cautious financial decisions right now. I know everybody says no, help the economy, go spend. It's like, yeah, you go do that. Yeah. Honestly, I'm going to take care of my own.
Yeah.
You do. You need to take care of your own. Yep. I'm going to want to save some extra in my savings right now. Am I pouring into the economy? Well, I certainly was when we were down. I poured in the stock market.
Yeah.
Right now, I've scaled back my new investments. I'd kind of rather hang on to that as cash because who knows what's happening. But I'm not taking my money out of the stock market right now, even though I do think a winter is coming because we don't know when. It's possible that the pandemic ends. We say, woo, those were some bad quarters. Everybody's pretty much back to normal. And we keep roaring on for another 2 years. Yeah. And so, you miss out on 10% in 2021, 10% in 2022, and then it finally tanks. Well, you should have just been in the market to take the increase, right? Even if there is eventually a loss. And so it's not as if you should pull out your investments. I wouldn't do that. But I also wouldn't do nothing right now. You just got to be aware.
I think that's an important point is you should keep some cash reserves on hand.
I think bigger than normal.
Yeah, and for a private individual, that's referred to as an emergency fund. And you should have had that to start with. You should always have that. At a time like this, we're just going to build that up a little bit more. If you're a small business, you should have also already had this as well. And again, in our own business, we're taking that emergency fund that we always have and we always operate with, and we're just being a little bit more cautious with our expenses right now. We're just cutting back a little bit to keep a little bit more cash on hand to help us bridge the gap if a financial winter does come so that we don't have to lay off all of our employees and we can continue to support our families and their families as well.
Be sure to give us a subscribe and a like if you hate financial doom days.